This week's FOMC meeting set off a bout of extraordinary volatility in the dollar, and especially in euro dollar, which actually saw a more than 4% swing in the last 24 hours, which is extraordinary. So the first thing that we can say about the statement is that it was more dovish than what markets were expecting. So we saw dollar weaken as high expectations for a really aggressive FOMC statement were disappointed. But judging by how far the dollar actually weakened, it's almost as if markets were expecting Yellen to ride a bull into the FOMC press conference, confiscate everyone's money, and then shout rate hikes at the top of her lungs. Now, obviously that didn't happen. The statement was actually a lot more dovish than the previous one in several subtle ways. So even though the word patient was removed from the statement, which frees the Fed to hike rates at any subsequent meeting, member forecasts for the future path of interest rates will move down. And in addition to this, Fed forecasts for the rate of growth and inflation were also downgraded. Now, on top of this, the Fed's estimate of the natural rate of unemployment was moved down. What that means essentially is that the Fed is confident that unemployment can fall even further without raising the rate of inflation, and that therefore the Fed is willing to let the labor market run hot for longer before it'll hike rates. So that is a lot of dovish content that would suggest a little bit of dollar weakness. However, I think it's important not to lose sight of the fact that the US dollar's fundamentals are still actually very strong. And we've seen that in the bounce that we've seen in the US dollar this morning. So already this morning we've seen US Treasury yields begin to rise again at the same time that euro yields continue to fall. On top of that, if you look at the very peak of the upward swing in euro dollar yesterday, so essentially the US dollar's weakest point against the euro dollar was still well below where it was a month ago. So based off that, I'd say that the downwards trend on euro dollar is still very persuasive. So looking ahead, US data is going to be even more critical than before. And I think the critical event next week for markets will be the release of US inflation data on Tuesday, which will give us a look at exactly how much upwards price pressure there is in the US economy.